In the previous video, you have looked at documentary collection as a method of payment, where the exporter applies through his bank or her bank for export documentary collection. In this video, we will look at documentary credit and its mechanism and the parties involved in an LC. That's right, documentary credit and the letter of credit mean the same thing. Letter of credits are governed by Uniform Customs and Practice for Documentary Credits, or UCP 600. These guide the banking staff on how to process and administer the LC. We may define a letter of credit as a written commitment or undertaking to pay by the buyer's bank to the seller at the request and on the instructions of the applicant, in this case the buyer, to effect payment up to a stated sum of money within a prescribed time limit, and importantly, on presentation of stipulated documents that the buyer requires. The function is to protect the seller from non-payment by replacing the creditworthiness of the buyer with that of the bank that issues the LC. So if you are an exporter and you are not sure about your buyer's financial creditworthiness or financial standing, you may want to request that the buyer applies an LC. So in other words, even if the buyer is unable to pay, the bank will guarantee this payment. The guarantee to pay the seller, however, is subject to strict conditions. The documents that are presented by the seller must strictly conform to the terms of the LC. In other words, all the stipulations or requirements stated in the LC must be adhered to, such as description of the goods, documents required, latest shipment date, etc. This legal principle entitles the bank to reject documents which do not strictly comply with the terms of the LC and is known as the doctrine of strict compliance. The documents called for will usually include a clean bill of lading or airway bill. Clean means there are no remarks or clauses from the carrier such as receive damage or torn in the transport document. Documents also call for commercial invoice, packing list, and possibly certificate of origin and insurance, including inspection certificate if the buyer feels that it is necessary to ensure that the goods shipped do conform to the standards or specifications described in the LC. The term documentary credit infers that as long as conforming or complying documents are presented, the banks will pay. However, banks do not guarantee that what is described in the transport contract, such as the bill of lading, will correspond to the cargo that is packed. Likewise, shipping lines or carriers also will not be responsible should the cargo packed inside a FCL container turn out to be totally different or not up to the expectations of the buyer. For this reason, bills of lading for FCL shipments normally will contain this remark: shipper's load count and stowage. Although the LC process may be more tedious, especially because of the doctrine of strict compliance, there are advantages to use the LC. LCs are used when exporter and importer are new to each other and they are not familiar with each other. LCs are used when political and economic risks in the buyer's country may render normal open account payment unsafe. LCs are used when exporter is unwilling to extend credit to the buyer, or when the contractual amount involved is very substantial or significant. Please click this QR code to watch a YouTube video from A and Z Bank that explains how the LC works and the various parties involved. You will recall some of the parties that are mentioned in the video. These include the applicant or the importer, the beneficiary or the exporter, the issuing bank or the importer's bank, and the advising bank, that is the exporter's bank, who notifies the exporter of the LC. The confirming bank, which adds its own irrevocable undertaking to honor the credit should the issuing bank default. And the nominated bank, which is also the bank name in the credit that is to pay, accept, or buy the draft or documents presented by the exporter. The presenter is the one that can be the exporter or even a bank if the bank has bought the documents. Now, this is the typical traditional model of the letter of credit process. Please do spend some time to have a look at the stages and the processes. To keep things simple, I have shortened the process of LC into 4 simple steps. Okay, let's begin with the buyer opening or applying an LC with his bank. Here, the LC must specify the documents required and name the advising bank, which is usually the seller's bank. The buyer will apply the LC, naming the seller as the beneficiary. The issuing bank then sends the documentary credit to the advising bank. The advising bank informs or advises the seller of the documentary credit. When the seller receives the LC, the seller should check or review the LC to ensure that he can meet all the requirements stated. Usually 3 sets of original BL consigned to order or consigned to order of XYZ bank or such and such a bank should be stated in the BL under the consignee column. The original BLs are received from the shipping line or carrier. The seller then takes the documents and presents this document in the form of a package to his advising bank. The bank will check that there are no discrepancies, and then he will pay the seller. The seller's bank or the advising bank in the traditional model will send the document package to the issuing bank by mail or by courier. This will be digitally transmitted in the digital or blockchain model. The issuing bank reviews the package to ensure documents are in conformity with the terms of the credit and pays the advising bank and then advise the buyer that the documents have arrived. The buyer will pay for the goods accordingly. The buyer will be able to use the original BL to exchange for a delivery order from the carrier or shipping agent to take possession of the goods from the port. So what is a DO? A DO is an order given by the shipping line to the port terminal operator to release the cargo to the person or company name in the DO itself. The port operator is like a custodian of all the goods that are shipped to that port of discharge. So sometimes, in fact, many times the importer will authorize on the DO his transport company or logistics company to collect the container on his behalf. You can contrast the typical traditional model with the blockchain model that is increasingly being adopted. When blockchain platforms are used, the data is exchanged without having to courier documents over physically. So long as the data match, the payment will be released to the relevant parties, expediting the entire process of checking and mailing, and other possible delays that may be due to discrepancies. So the blockchain model provides a very efficient and also secure method. Nowadays, many banks provide a lot of useful information on its website, such as this one from OCBC Bank. In this case, the exporter may request for an LC from the buyer. And if the exporter is still not comfortable with the buyer's bank, the exporter can actually request for confirmation of the LC. The confirmation is provided by the exporter's local bank and guarantees that should the issuing bank or the buyer's bank default, the confirming bank will bear the responsibility and pay the seller. Here is an example of an LC application form. So if the buyer is in Taiwan and wishes to use LC as agreed between the parties to the trade, then the buyer will have to make the application with his bank in Taiwan using such a form like this. This is an LC advice that has been received by the exporter from the advising bank in SWIFT format. Can you tell where the buyer's bank is and where the exporter's bank is? The buyer's bank is actually in Taiwan, while the advising bank or the exporter's bank is in Canada. There are several types of letters of credit, but for this module, we will cover irrevocable LC, confirm irrevocable LC, and back-to-back LC. An irrevocable LC is so named because the terms and conditions cannot be amended or cancelled without the agreement of all parties involved. So it constitutes a definite undertaking on the part of the issuing bank to pay the beneficiary or any bona fide holders of bills of exchange drawn and/or documents presented to the bank, as long as the terms and conditions are strictly complied with. This type of irrevocable LC gives seller a more secure mode of payment and is favored by exporters. In fact, all LCs are irrevocable under the UCP 600 rules. When the advising bank adds or confirms its irrevocable undertaking based on the instructions of the issuing bank, then the LC is deemed to be a confirmed irrevocable LC. It usually contains phrases such as, "We confirm the credit and hereby undertake blah blah blah." The advising bank endorses a firm and independent obligation to pay the seller and takes on the role of a confirming bank. Such LC will be more expensive, and the confirming fees is usually paid by the seller. Let us now take a look at a few trade financing options based on the LC. First is back-to-back LC. If you are a middleman, a trader, you have to buy goods from another supplier and then ship it out to a final or ultimate buyer, but you need the money. If that is the case, you can actually use the LC from your buyer to so-called finance the LC to your actual supplier. This is called back-to-back LC. The next is discounting. Now, sometimes you may have received an LC, meaning that you have to ship out goods, but you need money to buy raw materials and parts and stuff like that. So what you can do is to use the LC that you receive from your buyer as the collateral to borrow money from your bank. This process is known as discounting. The bank will remit the proceeds of the LC minus the interest that would be due on the loan. If the annual rate of interest, say on a secured loan, is 12%, then the interest that is deducted for a bill of exchange that mature in 3 months' time will be 3%. But at least, even though you can't get the full amount that you would have if you have held the bill of exchange to maturity, you can access the funds sooner. What is a trust receipt? Well, it is a notice where the bank allows the buyer to take possession of the goods, but the title or the ownership of the goods still rests with the bank. So the bank provides buyer with a short-term import loan in order to pay for the goods imported under the LC. It offers several benefits because the buyer will not need to make payment immediately. Okay, so he can pay after he has sold off the goods. As for packing credit, this is very useful to small, medium enterprises for financing needs. It's basically a loan or advance granted to the exporters for financing the purchase, processing or manufacturing or packing of goods prior to shipment. Packing credit is disbursed against the LC that is issued in favor of the seller or a confirmed order for the goods. So in some cases, when the buyers are not ready to pay in advance to the exporters, this facility will be useful to the exporter because it helps to bridge the gap in funding until final payment is received on shipment of the goods. Next, I would like to share briefly on trade finance platforms. I would like to end this topic on some developments concerning blockchain in trade finance. In recent years, especially with the onset of COVID-19 pandemic, banks have ramped up on efforts to boost efficiency in trade finance and transformed the industry that used to be heavily based on paper documents. Examples of blockchain trade finance portals include Marco Polo, Comgo, We.Trade, Contour, Easy Connect, and Singapore's own Camel One trade finance platform. Blockchain portals will reap time and cost savings other than providing security of transmitted data and information. Let me introduce Singapore's Camel One trade finance platform here. This is Singapore's first unified digital trade platform. Its multi-bank portal aggregates or gathers various trade finance banks' products on one site. Available on the Network Trade platform, Camel One Trade Finance is connected to NTP's secure repository, where all trade-related documents, like your shipping documents, commercial invoices, BL, etc., can be safely stored. So traders are able to submit bank applications, send, receive, and store documents online. This allows banks also to receive and start processing e-applications in real time. So this cut down the trade financing processing time significantly and yields operational efficiencies for both the buyer and seller. Furthermore, because all the trade documents are uploaded onto the Network Trade platform or NTP, all the trade participants on this platform are able to enjoy real-time updates on the progress of their transaction, so that they can better plan their working capital needs. You may want to check its website for the latest current development. Please scan the QR code to watch a video demonstrating how a trade finance platform known as Easy Trading Connect works using blockchain technology. We have come to the end of this topic. Please proceed to watch the summary video where we will recap all the different methods of payment. Thank you.